The information contained on the Crypto Sports Collector website and social media is for general information and educational purposes only. It is not intended as a substitute for legal, commercial, and/or financial advice from a licensed professional. The business of online investing is a complicated matter that requires serious financial due diligence for each investment to be successful. You are strongly advised to seek the services of qualified, competent professionals prior to engaging in any investment that may impact your finances.
Crypto.
So there's two views. There could be two views on kind of the market in general, what's happening with the economy, and specifically like with crypto. One is, there's a point of view that I've heard out there about, listen to people that are richer than you or have money or have been very successful. In this case, listen to Warren Buffett. And let me go more specific. Listen to Warren Buffett, and one of his opinions is that crypto is not a good investment.
Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to...
I think it's a mistake, but I have to be honest, it's really hard to question a billionaire and a person with that much internal access and with the amount of information that he's privy to. Whenever someone with his track record says something like that, there's usually a hidden message inside of it.
It's crashing, it's not a good investment. And then in the same market, you've also got other people that are very bullish on crypto that are saying, you should be buying on the way down. They're maintaining their bullishness on this idea of cryptocurrency even as it's going down.
Of course, they dropped their ApeCoin, which is currently trending around $14 to $15 right now. Right today, they dropped their merch, and then their merch was a way to get more people to buy into it. But of course, there were some issues with, Coinbase that they was having with that coin. But the point of it was that people were willing to buy that ApeCoin to get to their merch. So they're creating use case for utility. You understand me? And not only did they do that, they set up partnerships with different buildings in Miami to where people can pay their rent with it. You understand me? They really want to prove a lot of use case and utility with it. So therefore, and not only that, there were so many people that was able to buy into their fund, apes. So they're going to be creating a lot of wealth transfer of hundreds of millions of dollars. Now, some people say, up to $1 billion with the amount of money that they allow people to buy into their project. You understand me? And at the beginning of this thing, I told you I didn't care about no artwork. I don't care about no market. It's about what the technology allows you to do. And they've been able to utilize and create a creative business model that allowed them to be able to make billions of dollars. You understand me? Or the circulation of $1 billion in the future project, because every time I help somebody create an NFT project, I'm helping you establish a brand, create a business, build a community, utilize a technology.
It's interesting to compare and contrast these, and I feel like I'm somewhere in the middle personally. And I think there's valid points to both of these. Those are oversimplifications of those points of views. But if I take the first point of view, which is listen to somebody that's been successful, like a Warren Buffett, and they have a negative view of crypto, for example, right? I think there's something to be said that you have to look at people that have been successful, like Warren Buffett. In fact, I do that a lot in my personal investments for stocks, for the housing market, just traditional investments. I started Crypto Sports Collector because I love understanding those fundamentals and learning from people like Warren Buffett, right? In fact, what I try to do with Crypto Sports Collector, I know this is a bit of a tangent, but it's important to understand where my point of view is coming from. I think there's a lot of things that you can take from traditional investing in the stock market and real estate and apply those same types of principles to the crypto market. They may not translate one for one because the crypto market and NFTs and sports NFTs are so new. They've only been around for a few years, where the stock market and real estate have been around for 30, 40 years. So a lot of the wisdom and a lot of the knowledge is over 30 or 40 years worth of data. Crypto and NFTs are a much shorter time frame. But I think just generally speaking, there are investment principles that you can take and borrow and apply them to the crypto and sports NFT space. So I agree with that point of view that you should listen to traditional wisdom, people that have become rich and people are very successful. But you can't, you've got to develop your own point of view as well too, right? And so let me stop there and compare and contrast that to crypto just generally, right? There has been hype about crypto, and a lot of people got rich and wrote it up, and a lot of people are writing it down too. And so I personally am very still bullish on crypto and blockchain and NFTs just in general. I believe in the technology. I believe there is a place for it in our society in the future. But the hype and the news about it, I think, leaves a lot of sour taste in people's mouths because either they don't understand it, there's a lot of fraud in it, and some people are just kind of resentful that some people just quote unquote were lucky and just got rich and wrote it up, right? And so they just want to see that fail, right? So there's a lot of things that this can tell us about society and just feeling left out from crypto. But at the same time, I also think that a lot of crypto investors, I don't have data on this, but a lot of crypto investors, I don't think were traditional investors. I think they were people that were just anxious to see the money grab and markets go up, and they might not have been the traditional person that understood how does Warren Buffett think about markets, how do typical stocks act, or do they have real estate in their portfolio. I don't think that's who the crypto crowd was. I think there is a portion of that crowd that probably were disciplined investors, but I think there's a lot of undisciplined investors there too. And so I think with a crash like this, it's funny enough, I think those kinds of populations of people start to get separated out. In private equity and in venture capital, we call this, the smart money and dumb money leaving the market. And so when you have crashes like this, and how many have there been for crypto, right, over the years, right? There have been major ones. You have a lot of quote unquote dumb money leaving, people that kind of wrote it up, and people that are just kind of getting out, but they're not in it for the long haul. They're probably in there to just make a quick buck.